Don't let the title fool you. In this video, we are going to pass along a strategy that, yeah, could possibly make $500 turn into $500,000. But we have to start off by saying, guys, this is extremely difficult to do and even more rare, possibly. So let's show you what is to come. We're going to jump right into the strategy itself, first off, and then we'll talk about how some of the math needs to play out over the time to make this, in fact, possible. And then we'll talk a little bit about scaling to wrap things up. But let's jump right into it. Sean's going to kick things off here and talk about the possibility and the opportunity of the strategy itself. Sean.
Thank you so much, Brendan. And yes, this may sound ridiculous to try to turn $500 into virtually $500,000, but it is not impossible. We're going to show you with the math. And I'm going to talk about a very, very basic strategy. First of all, you don't do it trading blue chip stocks right off the bat, that's for sure. So what I want to talk about right now is a stock like an Alphi, okay? You got to find stocks that are going to be able to run a little bit, especially when you're starting with that small account, to turn that 500 and then just start growing and growing and growing. We're going to use something where you start with not even an unrealistic expectation of a win. We're going to look for 10%. We're just going to look to see if we can make 10% multiple times. Neil's going to have the math for you in a minute, and I'm going to show you an example here with Alf, and it actually just happened a few days ago. So if we come over to the daily chart here, this is the kind of level and the kind of setup that you're looking for. You're never going to be able to invest in all of these stocks and try to pick bottoms like this. You know, AMC $2, this Alpha at $3, and then it runs to 22. What you're actually looking for is a realistic chance at making a trade and doing this consistently over time. So what I look for, the first advice would be, look for a stock that's already run, where we know the volume's going to get picked up and we have a chance for this to happen. What you look for here is a little bit of a pause. So almost like a stop and go here on a strategy. So what I would do is, you get this big move up. If you pause for a little bit, find these bottom wicks, right? 565, 560, 570, even back here to 5, these back end tops. Now, on that third day, now that we have these stars, we can get in here. Look, the market opens up here at $6 on this day. If you were to take your $500, invest it in Alphi for this one day, look, you buy it at $620. You take your 10% worth of risk on the downside, because remember, you're not trying to lose your whole account in one day. You're going to go 10% increments. So this gives you that clean look back here. Back down 10% is the bottom of this candle. So if you invest here, 620, your out's going to be down here at 550. That's your 10%. And as you can see right here, you blow upside much more than 10% today. But even if you find this opportunity, you know that Alphi or a name like this has that chance to get going. So if you take a shot here at 620, your back end gets you out at 565. That's your 10%. So you have your risk allocated, and then it's nothing but upside from there. And then if you take, so you get long at 620, you get out here at 680, 690, which is also, again, look, right back at the previous day's high, okay? So you take the long, you give it some previous day's lows, which is only 10%, okay? It matches perfectly, and then you take it out on that 10% up, and now all of a sudden, Neil, you've now started this mathematical equation of trying to make that 10% a day, finding the right names, looking at the right strategies where you have roughly a 1-to-1 risk ratio. It should get this math to work out, my friend.
And this is exactly the point. Now, I want to start this out by saying I'm going to show you guys how that math is going to work. This table is going to really, if there's anything you want to take away from it, the first thing you should do is realize the simple power of compounding. No ifs, ands, or buts about it. But this is the example. We want to start with that 500, and I'm going to run you through how you get here on your initial week starting the week of capital on Monday, 500. You trade on the end of the day Monday, and you're at 522 because I give you 4.5%. You're going to wonder, why do I give you 4.5%? We'll get into that in a minute. And I scroll all the way down. There's 5 trade days a week. I'm going to ignore things like weekends just for simplicity's sake. And then week 118, here's 500,000. How do you get those numbers? My assumptions here are that Monday's day of trade, you make 4.5%. You trade on Tuesday, 4.5%. You make zero gain, or you don't find a trade on Wednesday, so your capital is nothing. You actually hit the win that you want on Thursday by capturing 9%. Why not 10? Because I'm not making it perfect in this particular situation. And on Friday, you lose. So in this particular situation, I've made you lose 11% here, just so that you get some slippage to that downside. No one's absolutely perfect. If you can clearly see, what we have is 2 wins of half your target, another win of full target, and then a losing day. So we're actually only trading 4 days out of that 5. It is 3 winning days out of 4. I can tell you right now that is very aggressive. A successful trader, if you can win 55% of the time, or 55% of your days, it's actually going to end up being good so long as you're disciplined. But I'm giving it that 75, showing an extreme example here, and then only 1, so you're really getting that big end of the target. So the assumptions are very, very important. Each week, you simply start and reinvest the entirety of your account into each one of those trades. So clearly, you're needing to find a trading opportunity like the one Sean showed, where you do have something which is gapping and going, let's just say, and then giving you a chance to capture that gain. Now, you're going to have 10% winners every single time. Let's assume you don't always get it. Are you going to have some slippage? Yes. Let's assume you don't get the 10%. That's why we have 9 here. And then when you lose, is it only going to be 11%? And that's the thing. If you were undisciplined, if you lose twice your loss because you hang on to it, it vastly changes all of this. And not by a small amount, by a ridiculous amount. I can literally change it for you right here. Let's just imagine that I'm going to lose, instead of 11%, let's double it. Let's lose 20% and see what happens to those numbers when you run. I'm in real time going to show you that when we got to week 118, oh my goodness, now you're losing money, guys. That's the reality. I'm just showing you how quickly the discipline changes here. Now you're in a negative territory. The other side of this equation, and we're going to get into some of the scaling issues here, but I want to show you a different example of what Sean is talking about, because there's gappers and runners on an intraday level that you'd probably have to take advantage of here. And I'll give you an idea of a 1-to-1. So MRIN, here is a stock that was up previous session. I'll show you a 1-minute chart. Strong mover, so you know it's on momentum. It gaps to the upside. And then at the open, you get a test of the previous day's high at 8, and then you get a breakout of the high of the day at $10. It does make a move into 11 for that 10% return. When I zoom in here, I can show you this pullback here. I know because I was shorting in front of 10. Stalled out here in front of 920. That is 10% worth of risk to reward. The difference here is a couple of things. One, you had to spot it in real time. You had to know it was a gapper and then see that it was going to be an opportunity for you, and you actually had to hold through a halt. So there are a lot of assumptions that go into this, and we'll talk about this in terms of the challenges of scaling, where you'd have to make this work and be working hard to find those opportunities to actually keep that math going on a daily basis, because this only works because of that power of compounding. You need to be constantly finding these gap and go opportunities here, Sean.
All right, so we're looking for specifically very explosive kind of moves, stocks that are making, multiple dollar moves, specifically ones that might be on the lower end of the scale when we're talking about pricing. That has to come with a catalyst. So we have the concept here, guys, to be looking for that specific type of setup on maybe a daily time frame, Sean, as you showed. But let's talk now about what we need once we get to a certain point as far as volume and liquidity is concerned, because once we get to a point where we're trading 5,000, 10,000, 20,000 shares a day, you got to be able to find something that's, tradable with that kind of size.
Yeah, exactly. And one of the other points, first of all, we'll talk a little bit about scalability and size right now. And I actually called up one of the big dogs in the market that we know can do consistent volume. And I think this is what you really need to look for. Once you're going to trade that 20,000 shares, 30,000 shares, and you get to those weeks where you're starting to, really feel it, putting some real shares on, you want to sometimes go over to some names that can hold the liquidity, because you don't want to get caught up in a liquidity vacuum. And I'm just going to show you quickly here, NEO, what I'm talking about. You see a big move up. As you're starting to see some of the momentum in the name start to keep going, we have it here on NEO, and I'll call up another one quickly for you guys, also on Palantir. Look at the momentum, right? And so markets change all the time, and this strategy is going to be a tough one to implement every single day. So you want to find stocks, whether or not it's going to be long or short, you got to find stocks that are kind of trending in one way and that can do some serious volume. I'm going to go back to NEO for this example, because you need to be able to say, can the stock hold 10,000 shares? And as I look here on the level 2 and all these prints, look, there's a random 3,000, 3,000 more, 4,000, 3,000. So you can get in and out of your position. So as soon as your targets are met, you say, okay, like Neil's scale there, you have 4.5%. I can get out of that trade. I'm certain that if I hit a market order with 10,000 shares here of NEO, my slippage might be 3 pennies, something like that, and you are still going, it's not even slippage, you're gonna wipe out the level. If I'm long here at 49 and I offer 50s, I'm probably gonna get 10,000 shares worth of liquidity. So there's not that crazy slippage when you take big name stocks. But if I go back to that first example, and we're gonna call up Alf here, for example number 1, look at the liquidity here. Each one of these sizes is only 100 shares. So it makes it super difficult that if I have 10,000 shares and I say, it's printing 88s. If I could get out now at 88, all my 10,000 shares, then I can get that 4.5%. You're lucky that sitting right here at 83 is actually 10,000 shares. But look at all the way down. If you're looking for that liquidity, Neil, it's simply not going to be there on some of these smaller names. So you really, really have to extrapolate your strategy on multiple names that are doing consistent volume, whereby you can trust that you can get out of the number of shares that you're currently trading.
And this is an important thing. And one of the reasons why in the table that we made here, made the assumption that you get that 10% return, and I cut it in half and then included slippage to 4.5, 2 other days in the week. And then when you lose, it's over that 10%. It's 11% loss. Because, I just want to scroll down and show you, like, a day, you're going to have to be investing on these trades, 100,000 by week 93. You get that 50,000 mark by week 81. And the example I use on MRIN, you go from trading a few, less than 100 shares when you start out, to trading 9,000 share lots, right? And it's not so much when I pull up MRIN that it is impossible. It's done 250 million in volume today. There are levels here. I mean, despite the fact that it doesn't look like it's printing that much, look at how much is going on the time and sales. There's a lot of volume going through, especially on the dark pool. So liquidity is certainly there. The key thing and what makes it so difficult is you have to trade that breakout, let's say here at 9, and try and essentially scalp that move into 10 for 9,000 shares precisely the same way you did it for 100. This is what is incredibly difficult for most traders. You want to talk about the difference between a professional poker player or professional or successful traders and the average person? A lot of times it's not about that read or how well you sit at the table and read other players or follow your system or understand pot odds or understand risk to reward or understand your trading strategy. It's can you implement that strategy when there's 100 shares on the line, the same way you would if there's 1,000 shares on the line, the same way you would if there's 9,000 shares on the line, because there's no other way to make the math work unless you're somehow spreading that 100 shares out 90 different times over 90 different symbols. And last I checked, we're human beings, not actual algorithms.
So it's important to understand both scalability issues here, and it's important to understand the fact that this isn't going to happen overnight. This isn't a 1 month thing. This isn't a 6 month thing. So it's going to take time. Does the math work? Yeah, absolutely. But there's a lot of intricacies and fine details that we have to understand when you're looking at trying to attempt even something of this nature. But there you go, guys. A strategy that could potentially turn $500 into $500,000. Here's Valeria.
Hey guys, thank you for this useful tips. Dear viewers, please subscribe to this channel to see more great videos.